Good morning. This is Peter with Quantum Edge AI. What we have today is a few interesting trades. There's been a recent reversal in price. Apple, Meta, Dell. There's some interesting locations that we could get involved with. And I already made a couple trades today, Meta and Microsoft, and put them in the book. I'd like to discuss how we're going to go about doing that. So what Quantum Edge AI is doing for forecasting is locating a maximum value in a within a specific duration of time, in a future duration of time. So say, for example, the forecast period 5D. This forecast is for 5 days from now. So price is here. It says that this is the maximum value based upon where price is and its historical information, and says this is where the maximum should be. Now, we can construct trades of the long vertical by buying the at the money, maybe a little bit out of the money, buy this 225 and sell where the high forecast is, let's say 230. We're going to check out the risk profile. Okay, your total risk is 200 on one contract. If you have a $100,000 portfolio, what you want to be doing is risking about 1%, let's say, on the long vertical. Of course, it's entirely up to you how much you'd like to risk. 0.5%, 1%, 5%, as aggressive as you want to be. Now, what you want is finite risk, and you want a specific target. And in this case, we're going to target the 220, 229 location. How we do this is, luckily, Apple doesn't have a large bid-ask spread, so we can get in and say, maybe we want to wait till a minor reversal, save a couple ticks. It's usually not worth your time, but you could potentially miss a trade because of that. But yeah, you see, you already have like 30 cents of movement. So the more you think, the more you the more you wait for a trade to happen. A lot of the time, that's not intraday. Uh, you can just lose momentum. This has already happened. Should have taken place. You should have entered directly, immediately upon open. You do not want to wait, really. As long as the bid-ask spread is reasonable, you want to get involved and make the trade. But what we can do is wait in 7 minutes for the next next inference, which occurs in 15-minute intervals. And this next inference, given this movement, is going to be a little bit higher, somewhere around here. We may want to specify the next location for the short area, and we want to wait until this inference happens in 7 minutes. We can discuss a few things about this trade specifically. Um, Risk, it's really moved. Uh, so I like this trade a lot more at the open, to be honest. So we can look at other various positions. Meta, Microsoft, we already have two positions there. Dell already made its move. Coin, AMAT looks pretty good. So what we want to do is say, okay, well, where's the high forecast? Where's price? And we want to say, okay, well, how are we going to structure this 5 days out? Because this is based upon a 5-day forecast. Say buy, vertical. And then we want to, we'll say 185. And let's call it the 192 half, maybe. So this is a nice trade. I like this. Now the next thing you have to worry about is the total risk. You have to actually worry about it. It should be designed based upon 1% of your portfolios based for this specific strategy, roughly 1%, 2%. So in this case, $100,000 portfolio, we want to be trading 4 of these. And we want to be exiting around the 192. We don't even really want to look at the chart. It doesn't particularly matter. We're already looking at this chart here. The chart on TOS, you don't want to do too much analysis. You want to perform a trade, execute it, set up your exit based upon where price should be. Now, I don't know about should, but where it's predicted to be. So let's say we want to get involved with this position. We like it. This is a nice setup. Um, and we want to say, okay, well, so given it reaches its one, let's wait for the 10:15 inference to happen, but um, let's say it's around here somewhere, 192, 193. We're going to look at where we should be in the P&L, which would be $908, which would be roughly double. So we want to say that this next position is to sell after we open this up. We're going to open this position up, the 192.5, 185. We're going to hit it. And then we're going to confirm sell GTC at the $5 range for 100% profit target. So this is the structure that you want to be trading pretty much. You want finite risk, you want to specify an exit, and then you want to be disciplined and wait. Must wait. 99% of the time, when after you fill the trade, you're going to take a paper loss. You're going to take a paper loss 99% of the time. You have to be prepared for it. So you take that paper loss, take it to the gut, and you execute based upon your strategy. So what are we doing? The overall strategy here is setting up a long vertical. The sold call is the high forecast. The long call is where slightly out of the money where price is. And then you're setting up a profit target. And our exit is if it in 5 days, if it does not reach that value, if it does not reach this point, that specific forecast of that time, then you are going to exit the position. That is the goal. So you want to do that across various stickers. And we'll set this up. And you want to look for another trade. That's it. You did it. You made your trade. We have three opening positions here. Three open positions besides the pairs of yesterday. Pairs yesterday here. We want to move this position, the AMAT position, to move to group Friday. Move to group. So we're already up. We have a nice position here. We're along these verticals. Now you wait. These are your Friday positions. You've made them. Now you walk away. Okay. I think that's it for now, and we will get back for another set of trades on Monday. Thank you.